Hey guys, Steve Palise here. Property investors often debate whether to go residential or commercial. There's no doubt there are far more residential buyers than commercial ones. But that's partly because those who favour residential investments typically have little experience in this commercial sphere. There's also much more media coverage about people making money in the residential market, whereas commercial property is seldom spoken about. And if it is, it's usually focused on the risks more than the rewards. With that comes quite a few myths attached to commercial property investments. One of those myths is commercial properties don't grow in value at the same rate as residential ones. But look, if that were the case, there would be a huge disparity in prices, and it's just not true. Most commercial properties have actually shown at least the same growth as residential properties. The biggest difference is that the growth is often experienced in a different cycle. Let me explain. Residential property relies almost purely on capital growth to make a net return. Let's say you've bought a house in the western suburbs of Sydney for $780,000. You generate $26,000 in rental income per year, so that's $500 a week. But your expenses, including loan interest, council rates, water rates, insurance, maintenance, and property management, add up to $37,934 each year. For residential investment properties in Australia, the negative position can be offset by the individual's income. If you're in the 37% tax bracket, this would mean you'd get back around $4,400. Having said that though, your post-tax cash flow position is still negative $7,500. That means the house value must grow by $7,500 a year just to break even. Over the last 30 years, the average capital growth rate of a property in most Australian capital cities has been around 5%. That would equate to just over $41,000 in capital growth in the first year and more each consecutive year. So yes, you'd be doing way more than breaking even. Residential property is generally cyclical though, with periods of high growth, low growth, no growth, and even negative growth. Whereas a commercial property that is leased is more likely to have a steady income. Commercial properties tend to offer net rental yields between 4 and 8%, much higher than the 3 to 4% gross that is offered by residential counterparts. This means that many commercial investments are cash flow positive, and the lion's share of commercial agreements have fixed rental increases built into the lease. So things like inflation won't necessarily impact your income. And if you're generating that kind of rental yield, it makes it a lot easier to hold onto the property and wait for the long-term capital growth. The capital growth can also be cyclic, but of a different nature. The commercial market cycles generally lag behind the residential cycles, but this is mainly due to the longer locked-in leases. Commercial tenants are likely to tough out the hard times because the penalties for walking out on the lease are much higher than those for residential tenancies, and because their livelihood depends on the property. The perception is that there's a lack of growth in commercial property investment, but that is incorrect. If this were the case, you'd be able to buy in the commercial market much more cheaply than residential. It's true that different commercial asset classes have different growth rates, but there's much more to it than that, such as demand, land component, supply, etc. Investment in commercial properties is based more on mathematical algorithms than on market emotions and sentiment. Residential property investment is based on the hope of growth. Have I managed to change your perception of capital growth and commercial properties? Let me know in the comment section below. If you'd like to know more on how I've helped thousands of clients successfully source and purchase quality commercial properties across the country, get in touch today. Otherwise, I'll see you next time. I'm Steve Palise, author of Commercial Property Investing Explained Simply. Cheers.